welcome to Thursday's Market SITREP. Wiz here, the primary and weekly options model portfolio manager here at TGO. And weekly initial jobless claims just absolutely imploded. Good news, right? I mean, the consensus was 332,000, and we got 292,000. Yay! Happy days are here again. Faulty computer upgrades and faulty reporting by the states. The Bureau of Labor Statistics, folks, as you can imagine, with many bureaus of our government, is an absolute clown car. So even this time around, and if you look at those numbers, that drop, 38,000 below expectations, that would be the lowest level since April 2006. Okay, but even this time, the BLS admitted that it was more or less a lie. Labor says claims dropped due to computer upgrades in 2 states, and Labor says faulty reporting by states responsible for drop. But we're going to go ahead and report that anyway. So, market was up initially a little bit, and now we're pulling back a little bit. This rally is getting a little long in the tooth. I mean, here's obviously our Syria freak out a couple weeks ago, but this hey, what me worry rally really has me concerned. September is one of the most volatile months in the market historically in the past 100 years. It is the worst month, and with the FOMC meeting next Tuesday and Wednesday, Syria is still kind of on the back burner. This just isn't. This really isn't making sense to me. Don't fight the tape, but let's have one eye towards the exit here, folks. This is very, very interesting that we're having this 7-8 day rally, and as you can see right now with the market flat, the VIX is up a little bit. So everybody's kind of walking around the chairs here, waiting for the music to stop to see what the Fed's going to do. Now, as I said, you can't fight the tape. This rally here might be the taper's priced in. We think the Fed's they're gonna do something, right? It's just a matter of how much. And this might actually be a buy on the news event, right? Selling the rumor, buying the news, or vice versa. I think if the taper's priced in here, we might actually see a rally. But beware September and October, folks, because we have the budget fight and the debt ceiling fight still to go. So if anything, I think we see increasing volatility. I don't know if the market's going to absolutely implode when, not if, the Fed announces a taper. So we might actually drift a little bit higher from here. But I'd be very, very careful about jumping on any 8-day rally here, because this is looking a little long in the tooth. Like I said, we still have Syria hanging out there. New York Times op-ed page yesterday. A letter from Vladimir Putin, essentially slamming the United States. First half of it, read pretty well, and the second was a big old poke in the eye. The end of American exceptionalism. So this guy has more or less pointed out that everything that Barack Obama has tried to do is the right thing to do. So that's awesome. Now that we have Vladimir Putin pointing out that the decline of American exceptionalism is a good thing, well, Obama has achieved his mission objective. So, who cares anymore? Why don't we just break up into 50 independent states, kind of like the former Soviet Union, right? Maybe we can be like them, and maybe I'll move back to Texas. I mean, hell, they left once, they can leave again. But very interesting that we got Vladimir Putin poking us in the eye. Assad was on Russian TV yesterday saying, yeah, the threat of U.S. force didn't make us, agree to this, to disclose our chemical weapons and put it under UN control. It was our buddies, the Russians. So what an absolute train wreck. And the rebels, good, bad, or otherwise, have lost a lot of ground in the past couple weeks as we've been in this holding pattern. So don't count the Syria clown car out, because that can still potentially drive some volatility in this market. But like I said, be very careful. Have one eye on the exit. Make sure you're hedged as we kind of drift higher here, because this time next week we're going to have obviously absolute clarity as to what the Fed did. But be very careful going into our budget and debt ceiling fights, and also be very careful because as we start to enter Q3 earnings season, when we get out of this bizarro market where good news is good news, bad news is good news, and awful news is great news, this stock market's going to have to stand on its own with the Fed kind of pulling one of the legs off our four-legged stool. So if we can balance, great. But taking a look at the economy and just faulty data out of our government, very precarious time. So don't fight the tape, but have one eye towards the exit, okay? Make sure you have that ejection seat and that thing is armed and ready to go in case you need to tug on it, okay? I'll be back with tomorrow's Friday market wrap-up over at Wealth Creation Investing. So happy hunting, make sure you hedge, and I'll see you over there tomorrow.